Ladies and gentlemen, welcome back to the channel. AMC stock is down about 1% today, and here in this video we're going to go over exactly what's going on in our markets today and with AMC stock and explain, well, what's happening. So hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. So first up, one of the big stories today is Nvidia semiconductors continue to go higher. Nvidia has seen some very weird trading activity today, though. You were up 3% at one point. Nvidia actually broke above a $2 trillion market cap for a brief period of time this morning. And then what started? You started to see a pretty continuous sell-off in Nvidia. You kind of switcheroo down here towards the lows. You're heading back upwards again. We'll see though. Nvidia does tend to sell off, the following couple of weeks after earnings, anywhere from 10 to 20%. Does that happen again? Well, we'll have to wait and see, and that could drive the markets higher or lower, at least here over the next couple of weeks or so. So that's something to be watching for throughout the rest of the day today. It seems like Nvidia is really driving the S&P and the NASDAQ in one direction or the other. Now, with that being said, this relationship between Nvidia and the broader markets has been obvious. When Nvidia is doing well, a lot of the other parts of the markets are not doing well. That's because there's really not a lot of inflows to our market. So if Nvidia is seeing outsized, gains, $200-300 billion of market cap value being added to it over the course of the last week or so, where's that money coming from? $200-300 billion is not coming into our markets, so it's got to be coming from somewhere in our markets. And when that is happening, well, a lot of the time you're getting sell-offs in other stocks like an AMC. People are not hesitating. Funds are not hesitating to get rid of their AMC position to buy Nvidia. Now, when Nvidia does start to fall, I think that could start to change, but so far that has not happened. Now, here on the day today, the Dow is actually the best performing index, up 0.33%, S&P 500 up 0.11%, and the NASDAQ up 0.17%. You have the worst performer today, the Russell 2000. You are down 0.22% there, and the VIX is down about 3%. Now, we do not have any company-specific news for AMC, so the biggest reason why AMC is down at the time of recording this video, about 1 cent, so you're actually about to go green right now, down 0.23%, is because of, this sell-off that essentially you're seeing in a lot of small cap, mid cap stocks today, and that money being really FOMO'd into other areas of the markets. With that being said, you do have ARM, the IPO that came out like 2 months ago. That's 90% owned by SoftBank. Their ARM position is worth more than the entirety of SoftBank itself. So you're probably going to get a lot of selling there. They own 90%. Their lockup period is March 12th. That's when I expect you could see a more longer term or short mid-term kind of sell-off in some of your semiconductor names and some broadening out potentially of our markets. But we're going to have to wait and see if that does happen. We have PCE next week as well as GDP as well, and those are going to be big things that will also affect the markets. And then just simply put, what happens with Nvidia throughout the rest of the day today will also be very important and something that I'll be watching for that we will talk about in the next video. As far as an aggregate, the percent of stocks above their 50-day moving average today, you're actually in the green. You're up 0.65% to 51.76%. So that's definitely not a terrible result, given just how much red you're seeing in some stocks out there. Again, small and mid cap names. So there is that. That's kind of what's going on as far as the macro picture here. 10-year treasury yields are actually falling about 7.5 basis points today, which it doesn't seem like there's any real rhyme or reason for that, but that should be a net positive to stocks out there. That should be a net positive. To small caps, it's not serving that purpose right now. So pretty strange to why exactly that is. But yeah, that is quite a down move for a day for the 10-year Treasury yield. So nonetheless, I'll take that. I'm not going to complain at all due to a drop in 10-year Treasury yields. Now, yield curve inversion, the 10 and the 2-year yield curve is inverted 36 basis points today. Now, this is inverting more, and some people might say, oh, wow, we're inverting more. Isn't that bad? No, that's actually, a positive for markets, because when the yield curve actually starts to go positive is when you're entering into a recession potentially. That's when people will actually start to panic and potentially see more selling in stocks. We do have a new AI investor sentiment survey that did come out. Looks like your bulls increased from last week from 42.2% to 44.3%. Neutral investors dropped from 31.1% to 29.5%, and bearish investors dropped a little bit from 26.8% to 26.2%. And this kind of just tells you, this last week was pretty good with Nvidia earnings. This survey takes place on Thursday, so yesterday, and Nvidia reported on Wednesday. Yeah, that makes sense. Some people got more bullish on our market. So there is that. If you look at the Stonko tracker data, you do have 7,600 calls currently in the money, 75,000 calls out the money expiring today. In the money puts at about 12,000, out the money puts at 20,000. I'm not expecting a whole lot could happen today. I really do think that when we get AMC earnings next week, that's where things could get a lot more exciting, potentially to the upside. And personally, I did buy a trade in AMC for AMC earnings. Simply a trade. I'm willing to lose all of this money that I put in this trade, and I explained that in the last video. So go watch that video if you have not already, or watch the next video coming out later on today, and I'll go over that trade, and we're going to talk specifically AMC earnings. Nonetheless, let's get into some of your other data. Ortex here, you do have 12.42% short interest of free float, so that is continuing to rise today, up from 12.2% or 12.1% that we have been at over the past couple of days. So that's a little bit of good news. Short interest, the dollar amount that's currently sold short, $137.48 million. Days to cover, 1.89. 31.1 million shares that are currently sold short. Shares out on loan, 33.92 million. Cost to borrow, 1.03%. Utilization of 51.91%. And short score of 64.68 out of 100. So your data is actually getting a little bit more towards a potential for a short squeeze. You're seeing short interest continuing to rise. You're seeing no signs of shorts covering. All of that is good for a potential short squeeze down the line. But we'll have to see. A lot of basically all of this will ride on AMC earnings, which comes out next week. And while we give this a second to load, let's take a look at the stock twits sentiment barometer for AMC. And today, probably no surprise, sentiment is bearish at 42. Yesterday it was at 44, so a little bit more bearish today than yesterday. Message volume is at 50. Yesterday it was at 51, so a little bit lower than yesterday, but roughly still the same. And the participation ratio is still sitting at 54, which that is categorized as neutral and is the same as yesterday. Now, not as many calls being bought today than what you've seen yesterday, but still a substantial amount here. You do have 66.68% of the call activity. The volume activity being calls. 33.32% of the volume is to the put side, so about 2 times as many calls than puts that are still being bought today. So overall, I would say that is a win, even if AMC stock is slightly in the red today. Who knows? By the end of the day, it could get really red, but We'll just have to wait and see. Now, as far as the Fed rate monitor tool, we do have the next Fed meeting in 3 weeks, 5 days, 1 hour, and 11 minutes from now, if you guys wanted super specifics there. For March 20th, the next Fed meeting, there is a 98% chance that we will continue to see a pause. There's a 2% chance that we will get a rate cut. For May, 19.1% chance of a rate cut and 80.6% chance of a continued pause. For June, 56.2% chance of a rate cut, 31.9% chance of a pause. So you're pricing in your first rate cut to start in June. I think that really depends largely on the PCE data that we get next week and other economic indicators that we do get. If we continue to see the economy really hot, inflation continuing to be sticky, I mean, that's just not going to be a good situation for the Fed or the possibility of actually getting some rate cuts. So, what's going to happen ultimately depends on that, and it will move around these probabilities. Overall, for 2024, markets are pricing, let's see, three rate cuts now. Only 3 rate cuts now for 2024. Wow. That's actually kind of crazy. So you're only pricing in 3 rate cuts now. 32% chance of that. 4 rate cuts is right behind it at 30.2%. Now, as I've talked about before, I do think it's a chance that we don't get any rate cuts in 2024 if we see inflation sticky and the economy continuing to do well. If inflation kind of stalls out here, there's a chance you might not get any rate cuts. And I don't think that's priced into markets. I still think a lot of market participants are expecting over 3 rate cuts. Even Goldman Sachs, their house view is 5 rate cuts for 2024. Markets are at 3 rate cuts for 2024. I actually think that's really good that the broader, indexes, the markets have been able to hold up, considering you've went from pricing in 7 rate cuts to 3 rate cuts. A lot of the strength we've seen in equities has been earnings coming in, for the most part, better than expected. You really can't complain at the earnings season that we have gotten. It all came down to NVIDIA, though, and NVIDIA continued to put up those results. And even though they only have a 10% guidance or so for next quarter's growth, that's still better than nothing. And their year-over-year numbers, in which that's what Wall Street really likes to pay attention to, still going to be really good for a while here. The comps are going to get a lot harder throughout 2024. When you're comparing to the quarter that we had last year when NVIDIA brought in 18 billion, let's say 2 quarters from now, it's the comp's going to get a lot more challenging, a lot more difficult. But for now, NVIDIA still has potentially a green light to stay where it is or even go higher. Again, at one point today, NVIDIA did break above 2 trillion for its market cap, and then the stock did sell off, and now it's back up again. NVIDIA does tend to sell off over the next 4 to 8 weeks after earnings, so we'll definitely have to see how that plays out, if that does happen again or not. And then beyond that, again, ARM's lockup period with SoftBank. SoftBank owns 90% of ARM shares. That does expire, so SoftBank is able to sell ARM stock if they would like to on March 12th. And if they do sell a lot of shares, well, that's obviously going to put a little bit of a damper in the potential semiconductor trade. Now, as far as the S&P 500, the S&P 500 is up 0.17% currently at the time of recording this video. You've also bumped right up to 510. 510 could act as a little bit of resistance. I think a lot of year-end price targets are around 510, 520, and it's just happened so quick. Some people are wanting to see a little bit of a breather here, but it's really uncertain. I mean, what's going to happen next? We could power right through 510. We could continue higher. I think the markets do want to know what that PCE number is going to be and what GDP is also going to be as well. And that will be coming out next week. So definitely something to be watching and paying attention for. So hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. You guys have a fantastic rest of your day, and I will see you in the next one.